Good day. Ira Epstein of Linn Associates with your agriculture update for this Thursday, and we're at the 4th of April, 2019, and we're about 4:15 p.m. Central Daylight Time. You know, I just now saw the president on TV as Vice Premier Liu was in his office, and they held a press conference. And regardless of what you think you're hearing, I'm listening to the man talk and to the Vice Premier. The president said he thinks we're probably 4 weeks away from doing a trade deal. And even after that, it could be another 2 weeks to get the final part written up. So when you keep hearing this stuff from the press saying he's inviting Premier Xi in early, the president cleared that up. He said he'll be invited here for a summit if they reach a deal. If not, there won't be a summit. Doesn't mean the President Xi can't come visit America, but don't get your hopes up that this trade deal is going to happen this weekend, the weekend after. That's not what I heard at all. And Robert Lighthizer was sitting in the office there. Vice Premier Liu was sitting there, and the president. That's enough for me. Is it bullish, bearish? That's not the point. The point is we keep hearing all these rumors, and it impacts you. Are they going to make an announcement? The market today that told you there wasn't going to be an announcement was copper. We call it Dr. Copper for a reason. But we're in the ag market. You can see you've gotten a little bounce, given up a little bit on the energies. And as we take a look at a weekly area chart of closes, the one thing I've been trying to explain, and I think I've done it every day for 4 days, is that when you look at this, I wouldn't be surprised to see this market hang a little bit at that 18-week moving average of closes of 904. Now you're back up over it to 906.5. But you are up for the week, 22.25 cents. That's not bad. When we take a look at how the daily bar chart is looking, you can see that we had right here a zone of resistance, fell down, probed just under these lows and really didn't go anywhere. So now you've got a market with, as I see it, a higher high, because that high is higher than that one, and lower low. That means I don't see a trend. An uptrend has higher highs, higher lows, downtrend, lower highs, lower lows. Where's the battleground? Well, we keep hitting this 18-day average of closes. You see that right through there? The next resistance in moving averages, that is the 100-day at 917.25. But I always like to call in my friends the Bollinger Bands, and they're around 914.5, but they're trying to arc a little higher. So I'll say that 915 area seems to be the resistance zone. It's about 9 cents higher than we're at right now, and momentum is pointing up. So no trend. The bias is up because you're over the 18-day moving average of closes. However, we keep hitting that number because it's looking to see, can it develop something from here? The pattern is ugly because you keep going up. You don't even have a pattern where you can get a break and then all of a sudden be up on you like that. So I'm just calling this market moving in waves that are very, very hard to call. Meal's the identical picture. The higher high, the lower low. Now, meal admittedly hasn't hit the 18-day average since Wednesday or Thursday. Okay, maybe it goes to the 100-day average, but I'm going to repeat it. While you get these waves in the market, I don't think there's any trend to be played right there. In the soybean oil market, I was looking for this market, as you know, when you lost the embedded reading to try to make a run for the closest of these moving averages, which is the 18-day average of closes. Now, what's been happening is it took a little time, so that number fell down as prices slipped back, and today, 29.08's that number, and you hit it. So as far as I'm concerned, the market has hit a resistance, but a target that it owed from losing the embedded reading. Now the question is, what does it do right here? And it is not a trend. You've got a lower low and a higher high. Bias is up, momentum is up, but I don't see a trend. In the corn market has been working off an oversold condition since last week's USDA report on acreage and stocks. Now we've still got a pattern of lower highs, lower lows. The market, if you look at the blue and the red numbers, these numbers are 32 and 35. Numbers under 30 are what I consider bearish, oversold, if you will. Not bearish, oversold's the right word. And it's correcting that. I would not be surprised to see, if you get up towards that 18-day average, a certain amount of traders that are caught here trying to come out at that number. I don't see anything in the way of a buy signal on the market. In the wheat market, let's talk. Here we are with the market that just yesterday I was saying, well, it threw out a buy, an uptrend, whatever you want to call it, higher lows, higher highs. If it follows through, it's not overbought at this point. Maybe the upper Bollinger Band's your resistance. Still flat momentum. You went right to that band at 476 and a quarter. Today's high 477 and a half, and that was the resistance. You didn't lose the uptrend. You've got the higher lows, the higher highs. The support's here at 462 and a half, and I was amiss in saying it's a buy there. That by the way, that would not have been a buy there in my opinion. That would have triggered the uptrend. I won't tell you where the buy is. I guarantee the way I teach charting, it wouldn't have been at that number. In the sugar market, we now have a pattern that, again, it's been such a chop in this market. You're caught between the upper and the lower bands, and they just keep narrowing in like that. It threw out today another trend. That's the right word. Higher lows, you got the higher high. Market's fighting resistance at the green line, which is the 100-day average, but the Bollinger Band's here at 1285, you're at 1271, and like I said before, I don't know what you're playing for. The market's not giving anything just yet. It's not saying I'm going up, I'm going down with any authority, and that's bothersome. In the coffee market, what I did say is we had the first close over the 18-day average, and today pros stepped in, tried to drive the market back down. It got as high, if you look at 96.95, so certainly tried to stick its neck up there, but whoever's keeping this market under pressure is still doing the job. It is not a trending market. You have the lower low, the higher high. It's just hanging at this 18-day average of closes. In the cocoa market, we finished today at 24.15, which is again over the upper Bollinger Band. And now if you take a look at the stochastic readings, both numbers over 80, both numbers over 80, not the day before, so you're embedded now. You're 4 days in a row up and over the Bollinger Band, the top one. I assign is a rule of thumb, that's all that it is, one of those 5 percentage points to each consecutive day over the market. In other words, I subtract it. And from my rule of thumb, that's all it is. I'm looking for this market to have almost no chance of closing over that Bollinger Band tomorrow. Is that a sell signal? Absolutely not. But for me, it just keeps me, how do I use the word? Disciplined. First of all, I don't teach that you buy Bollinger Bands. I don't teach that you sell lower Bollinger Bands. I do teach that when the first challenge of a Bollinger Band, that's where I think money's coming out. But then I do revert to embedded readings, which tells me as much as this market is up here, on pullbacks until this red line closes under 80, I expect to see good buying show up in the market. If the red number closes back under 80 over time, then I can see the market trying to challenge the support somewhere between the 100-day and the 18. Right now, this market's on a run, and I don't see anything stopping it just yet. In the cotton market, you have a pattern of higher lows. You've got a higher high, so that's friendly. You had a bullish crossover in the market. You see this right here? Notice that the green 76.16 is over 7,600. Here's your crossover, and you're trying to get a little bit of follow through out of that. What's the bothersome part is right through here. You're just overbought as you're doing all this. Overbought doesn't mean you have to break. What I do see is support climbing up to get above this last break low. So I'm expecting the 76.42 number. It's been jumping about 20 points a day. I won't be surprised to see it get up into that general zone of 76.60. However, what else did we have? Let me come back to that chart because it's pretty important. You lost the embedded reading. Do you see that? And yesterday, you can't get it back. What does that often mean? Often, that is the lead to price and the 18-day average coming together. In the cattle market, we were down yesterday. That's what I wanted to show, the lower low. We had lower highs, lower low in an oversold condition. The question yesterday was, will the market make a run to the support of the Bollinger Band and the 100-day average, or is this enough for the pros? It got answered today. That was enough. Whenever you're in an oversold or an overbought condition, you got to be careful. You don't need the last penny on the table for some of these numbers to be hit. You're in a zone. Zones are as important sometimes as the number. It depends what you're playing for. In the feeder cattle, same thing. Look, you were pretty looking ugly yesterday. But we have to understand this is a market that came from 156 to 146. So you had about an 8% drop or so. And the market's now roared back. So now you got the lower low, the higher high. You're back. It's just a swinging market. Guess what market took off again today for limit bid? The hogs. Now, from what I heard from the Chinese, if you're looking for big export business just because they're in town talking a trade deal, no. Do they need the pork is a more realistic question. And they do need the pork, so I don't know that that will stop them from buying from America. From everything I'm hearing in these meetings, and I'm watching the actual interviews with the people, it doesn't sound like they're not getting along. And I think the pork's looking at that. So you put it together, you try to come up with a game plan, and one of mine is through my morning subscriber video. These videos, I can only do so much. I talk trends. Like what I was saying in that one market, is it a buy there? And I said, no, that's not how I would have taught to buy. Where I teach you to do all that is in this morning subscriber video. Because I'm going to review with you the exact formation, and I am able to say and point out, as the market's in live trade, this is how I think you start your day. I think this market's a buy, this is a sale, this is a high probability trade based on blah, blah, blah. We go through the numbers, we go through the chart, and the idea, the whole idea is I'm a sounding board. If you're looking for somebody that, number one, I probably don't even know you, and you just want an honest opinion, what the charts look like, if you respect me, then this is a way to get it. It could help you with your ETFs. I cover 5 ETFs, and I'll add more as time goes on. I'm talking all these with these specific ideas. I'm adding, with no extra cost, very shortly, a couple of evening of these recordings. So I'm going to throw this into my subscriber package for you. So big night, maybe on a Sunday night, you've got your trade the next day. You haven't heard me do anything since Friday. Something happened. Maybe you need to get that. I'm not saying I'm going to do a video every morning for you and every night for the $7.95 for 30 days, but I am saying I'm adding. So I think that's an awful lot. 26 cents a day. What do you have to lose by taking a look for yourself? And after that, we offer a 1 year. If you want to, after the end of that, try it for a year, $156. You want to go month to month, $15. You make up your own mind. You can go to our website, and on our website, under the word education or research, go to Ira's morning subscriber video, click it, full explanation there, everything you need. I'm Ira Epstein. Have a good day.